Yo, what's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to go over FUBOTv. They just reported earnings, record earnings, mind you. I wanted to give you my thoughts as well as my FUBO stock price prediction for the end of 2021 and 2022. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family, be part of the day one squad. You'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, or I'm mapping out a chart, or I've got a swing trade or a crypto trade, I send that out as well. So if that's something you're interested in, if you want to be part of the, part of the crew, come on over. We've got an amazing community, a lot of great people. It helps support the channel, and I would really appreciate it. Day one squad, you guys know that I love you. Thank you so much for your support. It means the world to me. But guys, let's get started. So FUBOTv, I'm going to try to make this video pretty short, but this is a stock that I've had on my watch list for months now. Never really pulled the trigger on it. I had a lot of other stocks that I was more interested in at the time. But after seeing their recent earning report, I went and did a pretty deep dive into some due diligence. I read a lot of articles and looked through their income statement and all those different, types of things. And I like it. I'm actually planning on adding it this week to my dollar cost average portfolio that I invest into every Tuesday, because I see a lot of opportunity here in the coming years if they can execute on a few different things. The other thing I wanted to go over with you guys is just my stock price prediction for the end of this year and the end of next year. So you can kind of get an idea of where I see it going and the type of gain potential within the stock. So let's get started. The first thing we'll look at is the website. So this is their website, guys. For those of you that do not know, FUBOTv is a live TV streaming company, platform, you should say. So essentially, they're just like Netflix, Hulu, Discovery, all of those different other streaming companies, but they offer live TV, and they put a large emphasis on sports. Sports is like their big thing. Honestly, guys, everybody has a streaming service nowadays. I don't think I've really ever had cable. Or if I did, it was when I was really little and I barely remember it. It's been streaming services my whole life. Honestly, I feel like everybody is on streaming services nowadays, and really the only people that aren't on streaming services are people that have to have live sports and live television, and B, the older people. I mean, I hate to say that, but I feel like in the next 5 to 10 years, when all of the older people kind of, go away, I don't want to say die, but go away, everybody will be on streaming services. I feel like it's a lot of the boomers on cable. I actually read an article with some pretty insane numbers on cable and how the drop-off rate's been happening. But guys, I feel like there's a large demand here, a huge audience that FUBO can really capitalize on with this live streaming TV and sports platform, because A, they're a lot cheaper than traditional cable companies. B, you can kind of, buy the smaller package, and they offer the ability to pick different channels or different, services that you want to watch, and not pay for channels you don't want to watch. But listen to this. So in 2020, we actually saw the largest decline in cable customers ever in history. So 7.5% of everybody that had cable canceled their services, which was like 32 million people that canceled last year. Now, obviously, the pandemic probably played a massive role in that, because people were cutting costs, everybody's getting laid off, stuff like that. But it's kind of weird, because you would also think that they would want more TV because they're stuck at home all day, but nonetheless, that's what happened. Now, as of right now, guys, there is like 77.6 million cable customers, and 55% of them said that sports is like the number one factor why they keep their cable, why they pay the bill every month and haven't canceled it yet. That's like 42 million people out of that 77.6 million. That's literally more people than what canceled last year out of the 7.5, drop off. So there is a huge audience there, guys. I mean, think about it like this. Out of that 42 million, if FUBO can, accommodate their needs, right? Why would they stay with cable? Why wouldn't they cancel and go to a service like FUBO, and pay less and pay for the channels that they want, get the live sports? FUBO also has a proprietary software where you can stream up to 4 different, live sporting events at one time on your monitor or your TV. Guys, honestly, I feel like most, people that have cable that don't just care about the sports, they have it just because that's what they have. They don't know how to use streaming devices or streaming services. God, I hate to say that, but you know what I'm getting at here. Guys, I'm just going to try to run through this quick. We're going to look at the, some highlights out of the earnings report. We'll look at the chart. I'll give you my thoughts, give you my stock prediction, and we'll wrap it up. So this is their website, guys. As you can see here, live sports and TV without cable, 100 plus channels, live and on demand, cloud DVR included. So you also get your DVR services. So this is based off my area. I've got 218 channels, but they've got everything. They've got sports, entertainment, news. Obviously I want you guys to come, check it out, do a little bit more of a deep dive on what makes them, a good streaming company or a good streaming platform. I'm just doing a real quick video. I did download the app and I, started the free trial and went through it, and it's a really good app. It's actually really nice. You can use it on smart TVs, Apple TVs, gaming consoles, computers, phones, everything. So really nice there. These are kind of their plans or their packages. As you can see, they've got the starter, which is top channels for sports and TV, $64 a month, 111 channels, 130 plus events in 4K, cloud DVR, family sharing, so 3 screens at once. Then you've also got the Elite for $79, and then the Latino Quarterly Plus combo. So like I said, guys, you can upgrade, you can add on stuff like that, you can add on different sports, and pay for what you want. Like I said, movies, news, sports, 4K. So it's cool. Really like the app, guys. The reason why I'm super bullish on this right now is because they're accommodating a huge demand of people. I don't think cable's going to be around forever. I think everything will go to streaming. Like, why would we keep cable? I just don't see the reason, obviously, other than like your storm comes, knocks your internet out, and you can't use the streaming, you have to use your cable box, but whatever. I mean, as we go on, I just think cable's going to get phased out. The second thing, and this is probably one of the number one reasons why I'm jumping ship and I'm getting on the stock and adding it to my portfolio, is because of in Q4 they're expected to roll out a sports betting app, or where people can bet on sports through their TV or through their app. Guys, they own their audience. Okay, Dish Network and DraftKings, they kind of partnered up and are doing something very similar. I feel like DraftKings sees FUBO owning their own audience, and that is kind of a threat because, guys, it lowers the customer acquisition cost tremendously because you can advertise right to your own audience. You can have them seamlessly jump from, game to betting. If you can offer, exclusives for any, user that bets a certain amount every month, like it's a really, really big thing for these guys to roll out that sports betting app. I think it can tremendously increase their revenue and really bring in more bottom line, because right now they're operating in the red. They've got a really bad cash burn, and I feel like that sports betting could really help out with that aspect because of the operating margin and the low customer acquisition cost that comes with it because of their already existing user base. Now let's take a look at the some highlights from their Q1 earnings. So as you guys can see here, they did 590,000 paid subscribers in Q1 2021. They did 228 million total hours streamed in Q1 2021. And then out of that 228 million, there was 129 hours that each one of those members or subscribers watched on average per month. 129 hours average per month. So, that's more than a couple hours a day, per each active subscriber. They also did 120 million in Q1 for total revenue, which I believe was up a little over 100%. So they did really nice there. They also had their daily active users increased by 100% year over year. When they hit the 590,000 for their monthly active users, that was also up a little over 100%. Their subscription revenue was up 131%. They did really well. Like I said, record quarter for their earnings. Now let's take a look at the investor presentation and the guidance. So as you guys can see here, it looks like it was actually 135% for their growth year over year. And then their guidance for Q2 is to be right around 121 million. Now, historically, when you look out pre-pandemic, their Q1 and Q2 were typically a little bit of a slower month. They typically had a little bit of a decline from Q1 to Q2. And then everything really ramps up in Q3 and Q4 from the seasonality of sports and just the nature of their business. Now, as they scale and get more active users and get more subscribers, which that's going to be a huge key factor with these guys, is consistently growing their audience. They've got to execute, as much as they possibly can on growing their audience, getting new users, getting more active users, spending more money and spending more time, and creating a more sticky user base for when they roll out that sports betting app, which that seamless integration, I think, will help with that as well. But as you can see here, the guidance is 174% year over year, but it's pretty much in line with Q1. So and I've even seen some consensus say that they're going to do less than the 121 and less than the 119. So we'll just have to wait and see. Now, as far as quarterly subscribers go, you can see here they did the 590 like we saw, which was 105% increase year over year. They're guiding to do 603,000 for Q2, which would be 111% year over year from Q2 of 2020. And then full year revenue, they actually increased their guidance. So the consensus was quite a bit lower. I want to say the consensus was guiding for around 400 and maybe 83 million. You'd have to check me on that. Don't quote me on that. But I do know that the guidance was quite a bit lower from consensus than what they actually upped it to. So they're projecting to do 525 million for full year 2021. Which would be 100% increase year over year. Now that 525 is the midpoint. I think they said as high as 530 and as low as 520. And then as for full year subscribers, they're looking to do 840,000, which would be 53% increase year over year. And their guidance on that was actually quite a bit lower as well. Now, a couple things here. The app downloads are estimated to grow 180% year over year from Q1 to Q2. So a lot more downloads, not just more subscribers. They're actually on pace to grow their daily active users by 172% to Q2 in 2021 from Q2 in 2020, which is, fantastic. Obviously, the more daily active users, the more downloads, the more subscribers. Now, the time spent on the app is on pace for a massive growth. They're looking at like over 237% increase year over year from Q2 2020 to Q2 2021. So, guys, again, stickiness, the more time that they spend, massive. They've also, they're burning money. They're operating in the negative. But one thing that is impressive with these numbers is not only were they able to grow subscribers, grow users, grow, active time spent on the app, they were also able to do it while also cutting down the cost per margin, or the cost per revenue percentage. So they're able to cut their costs down while also growing that quickly. Very impressive. But the fact that they are operating in the red, guys, this is a risk right here. They do have 465 million in cash right now. So it can help them sustain multiple quarters of this negative cash burn, but I don't see them producing a net income, like a profit on the bottom end, for years to come. I don't even know when. I mean, I could see it maybe, around 2027, but we'll just have to wait and see. 2025, 2027, maybe, depending on how quickly they can execute getting the sports betting app out and how well they can do with that sports betting app. So obviously, the more, the more partnerships they sign, the more advertisers they bring onto the app, the more services they offer, the more revenue. But just like DraftKings, they're going to consistently have to drive a lot of marketing cost. Hopefully the sports betting app can cut customer acquisition cost, but you can absolutely 100% positively expect more dilution because they're going to have to raise more capital, in my opinion. I do not see them not doing a capital raise in the next year. So what I did in my price target is I actually factored in a 10% dilution every single year, which is more than what it would be. Absolutely. I even think that's quite on the high end, but I wanted to be a little bit conservative. Based off of, like, if we take a look right here, guys, so this is their revenue estimates for 2021 and 2022 consensus. This is analyst estimates. Now, when you look at DraftKings, they're trading at like a 17 times price to sales. When you look at a company like Netflix, which is obviously a much more established streaming platform, they're trading at like a 7 times price to sales ratio. FUBO, on their trailing 12 months revenue, is trading it right at 10.1 price to sales ratio. Now just call it 10. And if we factor in share dilution of 10% every single year, they've got about 140 million outstanding shares. So if you take that 2021 revenue of 530 million, you times it by the 10 price to sales ratio, you divide it out on the outstanding shares and add the 10% in for dilution, that would give me a price target for the end of 2021 at $34. Okay. Without dilution, you would be looking at 38. For the end of 2022, the price target would be $49 with an additional 10% dilution. Without the dilution, you would be looking at like a $59 to $60 price target. I'm going to go with the more conservative of the 34 to the 49 for the end of 2021 and 2022, as also factoring in that dilution because I would rather speak conservatively and see it do better. But I think the 10 times price to sales ratio is more than fair. I also think that the 34 and the 49 is a very reasonable price target. From where they are today, that would give us some really nice gains. If we look at the chart here, you can see that they're currently sitting at $23.74. But their previous high was clear up here at $62. So, the 49 is absolutely doable. Now, back here was when everything was running ridiculously hot, obviously. So I don't think that it's going to run like that again anytime soon. But as you guys can see here, I mean, it came out. This stock has been on the market for, multiple years. They did some splits back here, but this price right here around this $23 to $22 range is a very critical level from back in May 2020, as well as back here in August 2018. So it's at a very, very critical level right here, where it did close above it, and it is holding as support. And then right above it, you've got another critical level within these areas. But guys, overall, you can see, I mean, what's funny, ran clear up. It's just straight up, straight down, straight up, straight down. So, I mean, what do you think is going to happen when they finally break through these levels of resistance? Straight up. Now that's not to say that it's not going to come straight back down, but down here at this level, guys, that is a really high value area. If you were to take the top of the bottom of the structure to the top of the structure, I mean, it hit literally an 88.6% retrace right on the dot. That is a very high value area, which makes it, pretty low risk, with all things considered. So you can see came all the way down and got all the way to a low of $14. And since then has had really nice movement upwards. And it did close, it opened the last day of trading at 25, and it did close at 23.74. which is again right above that really critical, resistance point or critical area from back in 2018 and 2020. But you can see, guys, I mean, they haven't had negative momentum in the stock, since back in, April 8th. So there's really been nice movement in the stock over the last few weeks. It did recover a lot of those gains that it took from the end of March through April, and even right here in the beginning of May. So it's starting to move back up, guys. It's even getting above these moving averages again, which is fantastic. And look what it did here. It came up and made a higher high. So really what we want to see it do is we want to see it come up here and go break through this level, come back test it. That would make a higher low, and then come up, break through this level, back test it, and then back up. Overall, guys, with the earnings report that they just came out with back in May, what was that? May 10th. That gave them a nice boost. I mean, they did gap up right here, came back, filled it, and then advanced. If they can continue to come out with earnings reports like that, they can roll out the sports book, they can continue to hit their guidance. I see this stock no problem getting up and hitting the price target that I went over at the $34 price target, and then the $49 price target. If you look at the chart here, 34 would be right about this area right here, which is, if you look left, right at the top of this gap. It also did act as resistance right there, did hold support in these areas right here. So it's actually a level that has seen, reactions before. And then the $49 price target would be right up here, which looks like it's right at the top of the gap right there. So again, another, level where it has seen reaction. I don't think that, it's going to take all the way to 2022 to get that $49 price target, but I would rather speak more conservatively. I also don't think that you'll see the $34 price target, within the next week or two. I definitely think it'll take a little bit of time to break through some of these levels right here that it's currently sitting at, but it's looking good, guys. I mean, the RSI is moving up. It's starting to pull back a little bit. You're on top of the moving averages. You made a higher high, so you recaptured. Now you just need to spring back test this area and, make a higher low and continue its advance. So I love it, guys. I'm adding it to the portfolio as soon as I can get a good entry. If it holds here, and opens up tomorrow and starts advancing, I'm probably going to add it if I can get it at a good price. Depending on what it does in pre-market, I'll make my decision then. If you want to see exactly what I do when I do it, come over to the Patreon and come join us. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Like the video if you get any value out of it. Also, let me know down in the comments what you think. If you already own it, if you've got a price target, I'd love to hear it. And I'll see you guys in the next one. Peace.